Welcome back to our channel, Tax Tips with Real Estate Bootcamp, your go-to source for expert real estate advice. Today, we're going to talk about an exciting topic for all you real estate investors out there: tax incentives for using rental income. If you're looking to maximize your tax savings and make the most of your rental properties, then this video is for you. So, let's dive right in. 10 tax incentives for rental income. Alright, let's start with the top 10 tax incentives for using rental income to save on your taxes. Number 10, depreciation. One of the biggest tax incentives for rental income is depreciation. The IRS allows you to deduct the cost of your rental property over time, typically 27.5 years for residential properties. This means you can offset your rental income with depreciation deductions, reducing your taxable income and lowering your tax bill. Number 9, deductible expenses. As a landlord, you can deduct various expenses related to your rental property, such as property taxes, mortgage interest, insurance premiums, repairs, and maintenance. These deductible expenses can significantly reduce your taxable rental income, leading to substantial tax savings. Number 8. Home office deduction. You have a home office that you use exclusively for managing your rental properties. You may qualify for a home office deduction. This deduction allows you to deduct a portion of your home-related expenses, such as utilities, mortgage interest, and property taxes, based on the percentage of your home used for business purposes. Number 7. Passive activity losses. Rental real estate is generally considered a passive activity for tax purposes. This means that if you have a rental property that generates a tax loss, you may be able to use that loss to offset income from other passive activities or investments, reducing your overall tax liability. Number 6. Section 1031 exchange. A Section 1031 exchange, also known as a like-kind exchange, allows you to defer paying taxes on the sale of a rental property if you reinvest the proceeds into another similar property. This can be a powerful tax planning strategy that allows you to defer capital gains taxes and potentially build wealth through property appreciation. Number 5. Low-income housing tax credit. If you own rental properties that are designated as low-income housing, you may qualify for the low-income housing tax credit. This credit can provide significant tax savings and incentivize you to provide affordable housing options to low-income individuals and families. Number 4. Rehabilitation tax credit. If you own a historic rental property and you undertake substantial rehabilitation work to preserve and restore it, you may be eligible for the rehabilitation tax credit. This credit can provide a dollar-for-dollar reduction in your tax liability and encourage you to invest in the preservation of historic properties. Number 3. Section 179 deduction. The Section 179 deduction allows you to deduct the full cost of certain qualifying property, such as appliances, furniture, and equipment, in the year you place it in service, rather than depreciating it over time. This can provide an immediate tax deduction for the cost of improving and equipping your rental properties. Number 2. Real estate professional status. If you meet certain criteria, you may qualify as a real estate professional for tax purposes. This status allows you to treat your rental activities as a non-passive business, which means you can offset your rental losses against your other income without being subject to passive activity loss limitations. This can result in substantial tax savings and increased flexibility in managing your rental properties. Number 1. Qualified business income deduction. And the top tax incentive for using rental income is the Qualified Business Income (QBI) deduction. This deduction, introduced by the Tax Cuts and Jobs Act, allows eligible taxpayers to deduct up to 20% of their qualified business income from their rental properties, subject to certain limitations. This deduction can result in significant tax savings and is a powerful incentive for real estate investors to use rental income to offset their taxable income. And there you have it, the top 10 tax incentives for using rental income to save on your taxes. I highly recommend consulting with a qualified tax professional to ensure you take advantage of all the available tax incentives and comply with the tax laws. If you found this information helpful, be sure to give us a thumbs up and subscribe to our channel for more expert tax tips. Thanks for watching.